While Wall Street pours money into giants like Nvidia and Palantir, one small-cap AI company just secured a major defense contract that could completely shift its trajectory. This isn't some speculative dream, it's a real strategic win from the US government. The company is BigBear.ai, and this new deal might be the catalyst investors have been waiting for. Hey everyone, Robert here. Welcome back to The Alternative Investor, where we look beyond the hype to find real investment opportunities hiding in plain sight. Today we're diving into BigBear.ai, ticker symbol BBAI, a company quietly working on artificial intelligence platforms for defense, logistics, and predictive analytics. While most people have never heard of them, BigBear is positioning itself as a go-to name for mission-critical AI, and their latest contract with the Department of Defense just changed everything. BigBear.ai isn't chasing social media buzz or chatbot virality. Their mission is rooted in high-stakes intelligence, helping large organizations, particularly in defense and logistics, make better decisions through artificial intelligence. That includes predictive analytics, AI-enabled cybersecurity, operational modeling, and decision support platforms. Their systems help both government and commercial partners make sense of massive, fast-moving data, and then act on it. It's not flashy, but it's powerful. Their core strength is solving complex real-world problems where failure isn't an option. In March 2025, BigBear.ai was awarded a $13.2 million contract by the Department of Defense to modernize a critical force management platform used by the Joint Chiefs of Staff. It's a 3.5-year agreement that will place BigBear's technology at the heart of military personnel operations. This wasn't a public bid, it was a sole-source contract, meaning the DoD specifically selected BigBear for their unique capabilities. That speaks volumes about how trusted and differentiated their platform really is. This deal not only provides immediate high-quality revenue, but it also serves as proof of concept and validation for future government work. As of Q1 2025, BigBear.ai reported $34.8 million in revenue, showing modest growth from the prior year. Net losses remain steep at just over $21 million for the quarter, but the company has improved its liquidity position with over $40 million in cash on hand. Debt was restructured in 2024, easing pressure from interest expenses and providing more flexibility to execute their growth strategy. Operationally, the company has narrowed its focus under new CEO Kevin McAleenan. His mandate has been to exit low-margin service contracts and emphasize scalable AI product development instead. This defense contract is the first major win under that refined strategy, and it could set the tone for the quarters ahead. Even after the contract announcement, BigBear.ai is still trading under $4 a share, and the market cap remains below $1 billion. A lot of that is baggage from its SPAC origin story. Investors were burned early, and Wall Street has largely ignored it since. But this creates a classic setup. You have a company with real traction, a large addressable market, and government backing, but it's still priced like a high-risk flyer. That disconnect between perception and fundamentals is where opportunity lives. This is no longer just a speculative play on AI, it's a company executing winning contracts and building a business that could scale dramatically if a few more pieces fall into place. If you believe in BigBear.ai's long-term potential, accumulating shares at these levels is a compelling risk-reward setup. But given the volatility, using options can be a smarter way to enter. Selling cash-secured puts at $3.50 or even $3 lets you generate premium while potentially acquiring the stock at a lower price. If you're already holding shares, covered calls at $4.50 or $5 can provide additional income without limiting too much upside. With a low share price and high implied volatility, the premiums on BBAI options tend to be attractive. It's not just about YOLO calls, it's about smart positioning for asymmetric upside. Now that BigBear has proven it can land big government deals, the next step is execution. Investors should be watching for follow-on awards from the Department of Defense, as well as new commercial partnerships in logistics or healthcare, where their AI platform is already gaining traction. Upcoming earnings reports will give more clarity on margins, burn rate, and growth expectations. Analyst coverage is still limited, but if performance continues to improve, that will change. Institutional interest typically follows repeatable results, and BigBear might finally be delivering those. BigBear.ai might not be a household name, but this latest defense deal puts them on a very short list of AI companies trusted by the US government. They're not trying to be flashy, they're building high-impact, deeply integrated systems for clients that demand precision. And they're doing it quietly, strategically, and with increasing success. For investors willing to tune out the noise and focus on fundamentals, BBAI might be one of the most overlooked AI plays in the market today. I'm Robert, and this is The Alternative Investor. If you found this deep dive helpful, hit that subscribe button and let me know in the comments. Are you bullish on BigBear, or are you waiting for another breakout signal?